Gold has just shattered records, crossing historic highs that no one predicted this soon. But what if this isn't a triumph? What if it's a warning? Because when gold roars, the economy often trembles. Could this surge be the flashing red light before a 2026 global depression? Are we standing at the edge of something far bigger than inflation, rates, or politics? Stay with me, because by the end of this video, you'll know why gold's record rally may be the signal that the world's next economic collapse is already taking shape. Gold's surge. The fear beneath the GLITTR. Gold doesn't rise on excitement, it rises on fear. In 2025, gold prices shot above $4,200 per ounce, breaking every record in history. Investors worldwide have flooded into gold, not because they expect prosperity, but because they don't trust what's coming next. When the world loses confidence in money, gold becomes money. But behind this glittering surge lies something darker: uncertainty. Inflation may have cooled, but real-world costs, from housing to food to fuel, continue to rise. Governments are drowning in debt, central banks are trapped between inflation and recession, and the global economy is slowing. And the last time we saw gold explode like this, it was during the 1970s stagflation crisis and right before the 2008 global financial meltdown. Every time gold breaks records, fear breaks loose in the markets. Why 2026 is ringing alarm bells. Analysts and economists are quietly beginning to connect dots that point to 2026 as a dangerous year. Here's why. Debt is at record highs. Global debt now exceeds $315 trillion. Interest rates remain elevated, strangling corporate borrowing and consumer credit. Job markets are cooling while corporate profits shrink. Major economies like the US, China, and Europe are showing synchronized slowdowns, something that rarely happens without a global ripple effect. Even more worrying, consumer confidence has dropped to multi-year lows. When people stop spending, economies stop breathing. But the hidden danger isn't just numbers. How the crash could unfold if the coming depression happens, here's how it might play out, step by step. Late 2025, growth slows dramatically. Investors shift from risk to safety. Gold keeps climbing. Early 2026, credit markets tighten, companies miss earnings, layoffs rise. Stock markets start to shake. Mid-2026, central banks slash rates to save growth, but inflation bounces back. Currencies weaken and capital flees into gold and silver. Late 2026, the perfect storm hits, collapsing asset values, rising unemployment, and governments struggling to fund debt. Panic spreads. The global economy enters a full-blown depression. Sounds dramatic? Maybe. But history shows depressions always seem impossible until they aren't. Could this still be avoided? Yes, but it requires discipline most governments no longer have. To avoid a 2026 collapse, nations would need to cut spending instead of printing more money, encourage savings and productive investment, build confidence through transparency, not manipulation, and above all, accept short-term pain for long-term stability. But politicians rarely choose pain, they choose delay, and every delay feeds the bubble. As legendary investor Warren Buffett once said, "You only find out who's been swimming naked when the tide goes out." The tide, right now, is beginning to pull back. What investors can do now? If a depression is on the horizon, panic won't save you, preparation will. Here's what smart investors are already doing. 1. Diversifying away from paper assets. Stocks and bonds will be volatile. Gold, silver, and tangible assets offer protection. 2. Building liquidity. Cash on hand is flexibility. It allows you to buy opportunities when panic hits. 3. Avoiding leverage. Debt amplifies risk. During a downturn, it destroys. 4. Focusing on essentials. Invest in sectors that survive necessity. Energy, agriculture, utilities, healthcare. 5. Staying mentally ready. Depressions don't just test your wallet, they test your patience. Emotional control becomes your greatest asset. Remember, every depression in history has also birthed fortunes for those who stayed calm and saw opportunity while others froze. The psychology of PSE, FER as the JIVR, depressions don't start with numbers, they start with fear. People stop spending, banks stop lending, companies stop hiring, and that's when economies stop breathing. If the public loses confidence in the future, even good policies can't stop the fall. That's why gold matters. It's not just an asset, it's a psychological shield. It represents safety when nothing else does. When gold breaks records, it's not celebrating, it's mourning. The big question, how cielos are we really? So, is the 2026 depression inevitable? Not yet, but it's closer than most think. The combination of high debt, weak growth, fragile banking systems, and overvalued markets forms a dangerous mix. One shock, one default, one panic, one policy error, and the dominoes fall. If history repeats, the timeline fits. Major crises often hit every 15 to 20 years. The 2008 crash was 17 years ago. Tick-tock. Gold's rise isn't just a headline, it's a heartbeat. And that heartbeat is racing faster than ever. So now, I want to ask you, do you believe the world is heading toward another Great Depression in 2026? Or do you think this gold rush is just another false alarm? Drop your thoughts in the comments. I'll be reading every one. And if this video helped you see the bigger picture, hit that subscribe button, tap the bell icon, and like the video so you don't miss our next deep dive into the trends shaping your money and your future. Because remember, in finance, the signs are always there. Only those who pay attention survive the storm. Stay smart, stay alert, and until next time, guard your wealth like gold.